Buy a bot, let it run, wake up to profits. No stress, no emotions, no hours staring at charts, just passive income while you sleep. That's the dream a lot of traders have at some point. And if you've spent any real time in this industry, you've probably either bought into it or been tempted to. So today we're going to answer the question properly. Can a trading bot actually make you rich, or is that just very good marketing? The honest answer is more interesting than either yes or no. Let's get into it. First, let's talk about what it actually takes to become a profitable manual trader, because it matters for the comparison. A human trader has to learn market structure, risk management, strategy development, and then spend months or years applying all of that until they find something that works and can repeat it consistently. That process is slow, it's expensive in both time and capital, and the statistics on it are genuinely uncomfortable. European financial regulators require brokers to publish the percentage of retail accounts that lose money. Across the data from those disclosures, somewhere between 74% and 89% of retail CFD and forex traders lose money. And when you look at longer time frames, research suggests that only around 5 to 7% of retail traders remain consistently profitable after 5 years. So that's the baseline. The human route is hard, the dropout rate is high, and most people don't make it. But there's also a reason for that, and it's not just strategy. If you've watched our video on revenge trading, you'll know that a huge part of the problem isn't technical at all, it's psychological. Fear, greed, FOMO, revenge trading after a loss, cutting winners too early, holding losers too long. These are documented, research-backed biases that affect almost every trader at some point, and they cost real money. We went through the actual studies on that in the last video if you haven't seen it yet. So the question of whether a bot can help isn't really about intelligence. It's about whether removing the human from the equation solves that problem. Now, before we get to the advantages, let's be honest about what a trading bot actually involves. Because the dream version of this is buy the bot, plug it in, forget about it. The reality is a bit different. A bot starts with a strategy. Either you build one or you buy one. Those rules then get converted into code. The code gets back-tested on historical data to see how it would have performed. Then it gets forward-tested in live markets, which is a slower and more honest process. And then, once it's running, it still needs to be monitored. Markets change, systems break, VPS hosting needs managing. If conditions shift, the bot might need adjusting. A trading bot is not set and forget. It becomes another system you're responsible for. That's not a deal breaker, but it's worth being clear-eyed about before you go in. With that said, when a bot is properly built and properly deployed, the advantages are real. The most obvious one is no emotions, no revenge trading, no fear freezing you out of a valid entry, no greed making you stay in a winner too long. No FOMO dragging you into a trade that isn't in your plan. The bot doesn't care whether the last 3 trades were losses. It doesn't care if it's a Monday and the market looks choppy. It sees a signal, it executes, every time. It can also monitor multiple markets simultaneously, trade around the clock, and never miss a setup through tiredness or distraction. But here's the bit that I think gets overlooked in most conversations about bots. The biggest advantage isn't that a bot finds better trades. It's that it follows the plan perfectly, every single time. Think about this. You have 2 traders using the exact same profitable strategy. One is human, one is a bot. Over 100 trades, the human skips a few entries because they don't feel right, moves a stop loss once because the trade looks like it might recover, closes a winner early because they want to lock it in. The bot executes every signal exactly as written. After 100 trades, who's closer to what the strategy was actually designed to deliver? That's the real case for automation, not superior intelligence, consistent execution. Now here's where humans still have a clear edge. A bot only does what it's told, it doesn't read the news. It doesn't understand that a central bank just made a surprise rate decision, or that there's a geopolitical event unfolding that's completely outside the historical data it was built on. A human can recognize when conditions are abnormal and simply choose not to trade. A bot will keep executing. This brings us to what's sometimes called the black swan problem. Think back to some of the extreme market events in recent history. The COVID crash in March 2020, the Swiss franc shock in 2015, when the currency moved 30% in minutes after the Swiss National Bank unexpectedly removed its euro peg. Flash crashes, surprise central bank announcements, events that fall completely outside of anything the historical data captured. A human trader watching the screen during those events can make a decision, pull the plug, sit on the sidelines, reduce exposure. A bot running in the background continues executing exactly as programmed. because that's all it knows how to do. The same quality that makes it powerful in normal conditions, strict rule following, becomes a liability when the market does something it was never designed to handle. Could a badly programmed or unsupervised bot blow an account during one of those events? Yes, it's happened. There's another major problem with retail bots that doesn't get talked about enough: backtest overfitting. Most bots look incredible when you run them against historical data. Big returns, tiny drawdowns, high win rates. Then you deploy them in live markets and performance falls apart. The reason is that it's entirely possible to build a strategy that fits historical data almost perfectly while having no real edge in future markets. The more you optimize a backtest, the more you risk accidentally designing something that is brilliant at trading the past and useless at trading the present. It's one of the most common reasons retail bots fail, and it's invisible until you're already live. And here's the last piece of this, which I think is the most ironic part of the whole conversation. A lot of bots don't fail because the bot stops working. They fail because the trader interferes with it. The bot goes through a losing streak, 8 losses in a row. The trader loses confidence, overrides the system, switches it off. And then the bot would have recovered shortly afterwards, just as any strategy with a genuine edge eventually does after variance runs against it. The trader, trying to protect themselves from losses, becomes the exact weak link the bot was supposed to eliminate. The emotional decision-making that was the original problem comes right back in through the side door. So where does that leave us? A bad bot will lose money faster than a disciplined human. A disciplined human will usually outperform a bad bot. A good bot will outperform an emotional human who keeps interfering with their own strategy. And the most effective setups increasingly combine both: a human who understands the market and can adapt, with a systematic approach that removes the emotional variable from execution. The biggest advantage of a bot is not intelligence, it's discipline. The biggest advantage of a human is not discipline, it's adaptability. The most effective approach may be using both. This is actually something that comes up a lot in the funded trading space. The same psychological weaknesses that cause traders to fail prop challenges, fear, greed, revenge trading, inconsistency, are exactly what a well-built trading system is designed to remove. At Lux Funded, EAs are permitted across every account type, which means if you've built or bought something that works, you can deploy it on a funded account without restriction. You can also use a trade copier to mirror trades from your own account, something we covered in more detail in a previous video. The tool isn't the edge is the edge. But if you already have one, removing the emotional interference is often the most valuable thing you can do with it. If this was useful, subscribe. We're covering trading psychology, strategy, and the realities of funded trading on this channel regularly. And one more thing before you go. We're giving away a number of $5,000 one-step challenge accounts this summer, completely free. All you need to do is subscribe to this channel and sign up for email updates at luxfunded.com. That's where we'll be announcing winners as we run these throughout the next few months. Subscribe, sign up, and I'll see you in the next one.